Welcome back to Season 2 of the Discount Property Investor Podcast. Our mission is to share with you what we have learned from our experience and the experience of others to help you make more money investing like a pro. We want to teach you how to create wealth by investing in real estate the Discount Property Investor way. Make sure you never miss an episode and download the Discount Property Investor app in Google Play or iTunes today. To jumpstart your real estate investing career, visit freewholesalecourse.com, the most complete free course on wholesaling real estate ever. Thanks for tuning in.
All right, guys, welcome back to the Discount Property Investor Podcast. This is your host, David Dodge. Mike Slane is out in the field today. However, I am joined by a certified tax coach and CPA, Craig Cody. How are we doing today, Craig?
I'm doing great. Thank you very much for having me today.
Absolutely. Thanks for coming on the show and being part of this. We are super excited to have you on the show. Craig, give us a little bit of information about yourself. Tell us a little bit about your background. I see that you were a police officer. I'm very interested to hear a little bit about your past.
Oh, sure. Well, I'm a CPA. I'm also a certified tax coach. I own a business, and I'm a former New York City police lieutenant. I was in the police department for 17 years. The last 10, I've been a certified tax coach. And basically, as a certified tax coach, I belong to a select group of practitioners throughout the country. We do extensive training, continuous meetups, mastermind groups, and we focus on tax planning for business owners and real estate investors, and basically trying to help them keep more of what they make, so legally reduce their tax liability.
Man, I know that taxes are the biggest bill of my life, and I always tell all my buddies and my friends, you know, the biggest bill in your life is most likely your taxes. And I'm actually kind of a tax nerd. I don't know enough about it to obviously coach people by any means like yourself, but I have read quite a few books on taxes, and I have a CPA that I talk to routinely here in the St. Louis area that, you know, try to get her to help me and coach me on, you know, how to save money on taxes. It's crazy how many pages is in the U.S. tax code. I think it's like 75,000 pages,
Yes.
Something crazy like that, right?
It's huge. It's
crazy. But, you know, I'm under the impression that only a couple of those pages are telling you exactly how, when, and where to pay, whereas the majority of those pages are written by rich people to protect rich people and, you know, basically avoid, prevent, or delay in paying those taxes. Is that right?
That's 100% correct. You know,
It's pretty
100%
crazy.
correct. Yes.
Pretty awesome. Well, I'm really interested to hear more about you know, some of the things that you're doing, tax planning, proactive strategies, you know, designed to minimize your taxes. So, what is a proactive tax planning, and, you know, how can it minimize your taxes? How does that work?
So the typical CPA accountant out there is very good at putting the right numbers in the right boxes, but it stops there. So they're not looking at how can we legally reduce your liability? What are you doing? Maybe we could do it a little bit differently, and we could save you some money.
Okay.
So that's what proactive is, basically taking the time and planning ahead. Whereas people go and they expect to see their tax guy in, you know, February, March, or April, and think, you know, they could work miracles. There's not a whole lot of miracles that can be worked at that point. You know,
right.
History has been written. So instead of looking in a rearview mirror, we're looking ahead, and we're trying to figure out what you can do to lower your tax liability.
Man, I've heard that so many times in all the books I've read. Tax planning is an everyday task. It's not something that you can necessarily do looking back, like you said. So
exactly.
That's, man, I've heard that so many times. So I love that. That.
You know, the book I'm going to offer your listeners for free is the 10 most expensive tax mistakes that cost business owners thousands. And we'll give you a link at the end of the show for that.
Okay.
But the number one mistake is failing to plan, not taking any action until it's too late. So if you start planning now, you can save a lot. If you wait till it's time to do your taxes, there's not a whole lot you can do except for maybe a retirement plan.
Okay. That makes perfect sense. I love that. I might even name the episode "Failing to Plan." Number one mistake is failing to plan. I love that, man. That's great. So what would you say is the biggest mistake that you see in small business owners making regarding taxes?
Picking the wrong entity to operate their business out of.
Picking the wrong entity. Okay. Well,
So
can we dive into that just for a
yeah,
couple minutes? So give me some examples if you don't mind. And I know that there's lots of ways that you can structure your business legally. And I know there's lots of, different elections that you can take when it comes to the tax side of things. But I don't know much about that. So you could fill me in. That'd be awesome.
right. So typically what happens, somebody starts a business, depending on, what they're doing is they'll talk to their attorney or an attorney, or worse yet, they'll go to LegalZoom or something like that and just, figure it out that way.
Mm-hmm.
But and hopefully they'll pick, based on where they are, the best way for liability purposes. But if they have the CPA in there and they confer with the attorney and the three of them get together and say, okay, what's the best way to do it legally? What's going to work out tax-wise the best? And is there a way to kind of get the best of both worlds?
Right.
Well, that's what you want to do when you choose the right entity, because me and you can be in the same exact business. But because of what I have going on in my life, maybe a corporation is best. And maybe for you, an LLC is the best.
Mm-hmm.
So we want to kind of see, okay, well, based on your particular circumstances, what's going to work out,
Right. Now, I don't want to dive too deep into this by any means, but what are the major differences between, like incorporating, having an LLC, so on and so forth?
So an LLC is, let's just say, either taxed as a partnership, taxed as a sole proprietor, which means everything, if you're in an active trader business, is subject to self-employment tax.
Okay.
Whereas an S corporation in an active trader business, only your salary is subject to self-employment tax. Okay. So depending on what you're doing, you may not want to be an LLC. Now, the reason you want to consult with professionals, because if you're a landlord, you might not want to hold your property inside of a corporation, because God forbid you get run over by a train and you bought property for $100,000 and it's worth $300,000. You want to get a step up in basis. So if your kids go to sell it the next day and take the money and go spend it, okay, they don't have to pay any tax on it. So depending on what you're doing, you really have to know kind of, okay, do I have an active trader business? Am I, just a landlord? There is a difference in how you want to have that entity structured. And maybe you need to have two entities, because maybe you are a landlord, okay? But maybe you also have some active trader business going on too. And maybe you could get the best of both worlds by having two entities, depending on what you actually have going on.
Right. So a lot of it is going to depend on what you're actually doing, how you're doing it. Does it matter how many people are involved in the business, and or if you have, W-2 employees versus 1099 employees? Are those factors that come into play, or not necessarily?
Not typically, because it really has more to do with the owners.
Okay. Which is good to know. I'm glad I'm asking these questions, because, this is stuff that I don't necessarily have a huge grasp on. So whenever I came across your name and, wanted to interview you, I get all excited about this kind of stuff. I know it's kind of nerdy to most people, but I love listening and learning about taxes, because, again, it is the biggest expense in one's life.
Listen,
go ahead.
I get excited. I
do too, man. I get excited about it. And correct me if I'm wrong, but, whenever people are sitting around, typically whenever I'm sitting around with my buddies having beers or whatnot, and we start talking about business and money, and I always bring up taxes, and nobody likes to talk about taxes but me. I always kind of joke around with my friends and ask them, hey, I'm not obviously asking what you make. That's not my business. But, what do you think your effective tax rate is when it's all said and done? And I get numbers anywhere from 25 to 40%. And that's fine. That's just based on your income. But if you look at your whole life, and you're talking about all the taxes that you pay. So obviously you get taxed when you earn, but then again, you're going to get taxed when you spend with sales tax. You're going to get taxed when you owed with personal property taxes. Sometimes you can even get taxed when you die. And I kind of joke around that, all my buddies are wrong, and that the effective tax rate's probably closer to 50% when it's all said and done, because you're paying taxes when you get the money and you're paying taxes when you spend the money.
And then you got, on top of your sales tax, you have real estate taxes, you have self-employment taxes, So yeah, tax rates are high, and
personal property taxes. Yep. It all adds up, man. It's super high.
If your effective rate is 37%, and you could come up with an extra $20,000 in deductions that are legitimate, you just saved yourself a lot of money.
A bunch of money. Well, Craig, tell me, how can business owners use their CPA to their advantage? Because a lot of these guys out here, I don't think are doing that. They're not using their CPA to their advantage. They're probably just putting together their spreadsheets or getting QuickBooks up to date as much as possible, and then they send it over to the accountants or the CPAs, and they just hope that the bill's not huge.
Right, exactly. So if they took the time to communicate with that person throughout the year, and I like to, with our clients, we send them a monthly P&L and we have a discussion. You do it via Zoom. It doesn't cost everybody a lot of time.
Sure.
And then you know what's going on. And when you talk to people, you see what's going on in their life, what they're looking to do, looking to buy something, sell something, whatever it is, and you give them that actionable advice that they could do and save money. So, take the time, communicate, make sure they're going to communicate with you. If they're not, find somebody that will.
Okay. That's a great piece of advice. I mean, basically you're kind of, it seems to me like you're kind of just offering a little bit of a coaching service in there, with your, CPA services, with your accounting and bookkeeping services. It sounds to me like you're also offering some coaching in there. I love having coaches. I have a real estate coach. I have a personal trainer. So I have a fitness coach, and I talk with my CPA as much as possible. I would say maybe once a month on average, we get together and we're either reviewing statements or we're talking about, the new laws that are getting passed in Congress, or, just ways to help save and reduce that tax liability. So
Exactly.
I love it, man. That's awesome. So how often, would you say that a business owner should communicate, with his or her CPA, and why is that so important, Craig?
So, once again, monthly is a good way to communicate. You don't have to be on the phone with the guy for an hour or the lady for an hour.
Sure.
Just touch base. And it also helps you know your numbers, where your business is at. And if you're doing it and you're doing it correctly, you could see where you are comparatively to the year before.
Oh, I love that. I love that.
Some businesses like to do it comparatively with the month before, depending on what their type of business is. Some businesses are cyclical, some businesses aren't. But just have that conversation, and hopefully they have the expertise and they're going to share it with you. And I always tell people, don't look at your accounting as an expense. Look at it as an income item, because if you're doing it right, they're going to save you a lot more money than they're costing you.
I totally agree. I look at that every year, and sometimes my tax bill can be, upper $2,000, $3,000, $4,000 with my CPA, because she's doing personal taxes and she's doing business taxes. She's doing a lot of stuff for me. But at the end of the year, I mean, she's saving me 3 to 5 times what I'm paying her, sometimes more. So I totally agree. That's
a pretty good ROI.
Yeah, it's huge ROI. It is. I want to take a quick break and talk about a book that you co-wrote real quick here, Craig. Secrets of a Tax-Free Life, Surprising Write-Off Strategies Most Business Owners Miss. I was just looking at this on Amazon a couple minutes ago, and I'm actually going to pick this book up. It looks like a great book. Can you tell me a little bit about the book real quick, Craig?
Oh, yeah, sure. I co-authored that with, I guess, about 9 other people. It's probably about 4 years ago.
Mm-hmm.
And we each wrote a chapter. I actually wrote a chapter on how to make your child's cleats tax deductible. Okay.
Whoa. Tell us a little bit about that, if you don't mind.
And basically it comes down to, you can hire your kids. Tax court says you could hire them, at the age of 7. I like to tell clients, let's wait till about they're 11. Document what they're doing.
Right.
And then, by paying them a salary and putting the money, into their bank account the way it would be if they were a regular, every other employee, then you could use that money to pay for private school, their sports activities, and you're effectively getting a deduction for that money because you're deducting it on your corporation. They're getting the money. They're not paying tax. All right. And then you're using that money to pay for the sports activity, private school. And with the new tax code, you could actually pay your kid up to $12,000 a year, and they're not going to have any federal tax liability. So that's another huge way to save money.
Wow. That's awesome, man. And there's multiple benefits of doing that approach too, because like you said, you're getting to deduct that money, but then it's tax free on their end, and then you can use it to spend it on sports or college or school or whatever. That's
stuff
awesome.
that you might normally spend post-tax money on.
Right. Okay, cool, man. Well, Craig, we're just flying through this interview. I'm having fun here, learning a lot. What would you say the 10 most expensive tax mistakes that cost business owners thousands are or would be?
So we talked about failing the plan. We talked about the wrong business entity. Another one is audit paranoia. Oh, I can't do that. I might get audited. Well, your chances of getting audited are slim. If you're doing things correctly and you're documenting, you should not be worrying about getting audited, because if you get audited, you have the backup there.
Right.
Another thing is, and this has to do with the new tax law, is qualified business income. So under the new tax code, if most businesses will get an extra 20% deduction against their net income at the end of the year when it comes time to pay taxes. There's some limitations on certain professionals, but so that's the guy with the K1 for 200 grand. Okay, if he did everything correctly, he's going to get an extra $40,000 deduction on his personal tax return. So that's a gift from the government. So you want to make sure you're doing what you need to do so that happens.
Right.
Setting up the right type of retirement plan, having your entity set up so you have the right type of retirement plan where you can put as much money away as you want.
Mm-hmm. And there's so many different types of retirement plans, I feel like, out there.
Yes, and there's also so many different ways you can invest your money. There's self-directed plans, where we see a lot of people where they're using it and they're investing in whether it's real estate or loans and stuff like that, and getting a better rate of return with a lot less risk. So setting up that right retirement plan can be a wonderful thing. And, if you're a husband, wife, that could be like $37,000 plus a profit sharing. So $37,000 to $100,000, between the two of you, if you're making the money and you could afford to put it away.
Yeah, that's a lot of money, man. That adds up, especially after a few years of doing that.
Sure does. Then we have hiring your family, hiring your kids. Are you doing that? Do we have a home office? Are we documenting that home office? And the thing that people forget about a home office is, maybe that deduction's not that big because it's maybe 3 to 5% of the total space in your house, but it opens up travel from your home office to your other office. It also opens up one of my favorites, the home athletic facility. So that could be your home gym or your pool, which becomes deductible.
Man, that's awesome. I've never heard of that one before.
Right. That's a good one.
Wow, that's an awesome one. Okay.
Exactly.
What else do we got here? So back up for 1 second. Hiring your kids. Can you also hire other family members, or does that basically only work with your children? I don't have any children.
Okay,
so I ever will have any children. So how could I maybe use that advantage or that strategy to my advantage? Well,
probably other than hiring a spouse, it doesn't really help you so much.
Mm-hmm.
But we have clients where they're supporting parents, and there's other things you wouldn't put them on salary or anything like that, but there are other things you can do to make what you're paying them tax deductible if you take the time and do some planning.
Right. So, okay. Interesting. Good to know.
Then we have
home office, home athletic facility, and then what's the next one there?
How about missing medical benefits? So if you have certain types of entities can set up a medical expense reimbursement plan. And maybe you hire your spouse and, what they're doing, you're not paying them a wage, but they're getting this medical expense reimbursement plan. And then they could use that to pay out-of-pocket medical costs, deduct basically the cost of your kids' braces, cosmetic surgery, dental surgery, stuff like that. So we have a lot of clients where, maybe they're a little bit older and they need some serious dental work.
Mm-hmm.
And it's going to cost them like $25,000, and now we just turn that $25,000 into deductible expense.
Wow, I never would have guessed that would even be possible, but that's awesome. I love hearing that.
Exactly.
Okay, cool.
Then we have your typical car and truck expenses. So as long as you're using your vehicle for business, you'll be tracking your miles and taking the deductions. And then we have, meals and entertainment. And entertainment is not really deductible as much anymore, but meals are deductible. So if you're taking people out and you're talking business, you should be writing them off.
Okay. I do that. I write off all my meals. business/entertainment, as long as I'm talking business. As a real estate investor, I'm not an agent, but I am an investor. I'm always talking about real estate. I'm always talking about the next deal. And, if somebody could potentially become a bird dog for me and help me find that next deal, I'd be happy to give them a couple $100, as like a finder's fee or a bonus. So yeah, I definitely do that quite a lot. When it comes to the car and truck expenses, I use an app called Mile IQ. I'm sure you probably recommend that, or several other apps that are just like it. It's basically always on, and it tracks if I'm it basically tracks anytime I'm in a moving vehicle. And then at the end of the day or the end of the week, I can go back and I can then say, hey, this was for business or this was for personal use. And quite honestly, because I'm always out in the field driving around, anytime I see a for sale by owner sign, I stop as a real estate investor and call that sign. And anytime I see a house that's got tall weeds, again, I might not even be out looking for property, but I'll pull over and leave a door hanger on that door. So basically, I would say 90% of the time I'm in my car, it's kind of, considered to be a business expense because I'm out looking for properties. So unless I'm taking the wife to dinner or I'm going to the gym or I'm running to the dry cleaners, most of my drives are considered business expenses. So yeah, having an app like that helps to record all that stuff because you're not having to then track, the day, the time, the starting mileage, the ending mileage. It just kind of helps put all that together in a nice little spreadsheet for you. Wouldn't you agree with that?
Oh, definitely. Miles, we have a lot of clients that are using that. So
yeah, that's awesome. That's awesome. So I just want to run through the list again. I counted 8, but I didn't go as fast as you, obviously. So I started with audit paranoia, qualified business income, number 2, setting up the right type of retirement plan, number 3, missing hiring your kids, or I added /spouse because I don't have any kids, home office or home athletic facility. That's probably my favorite one right there. Missing medical benefits / medical expense reimbursement plans. Obviously, car and truck. That's number 7. And then number 8, I just had meals and entertainment. So what am I missing on here, Craig?
Okay. Well, my 10 mistakes actually turn into 11. I'm not good with numbers.
Oh, that's all right. Give me 12, man.
So
I'm all for it. The more, the better.
The first one we talked about was failing to plan.
That's true. Failing to plan.
And the wrong business entity.
Mm-hmm.
And then the last mistake is missing my help.
There you go. There it is. That's right.
And that's where the real savings comes in.
Right. That's so true. That's so true. Okay. Awesome. Well, Craig, this has been an awesome episode. I like when we do a little bit shorter episodes like this. People can get through them quickly. Craig, how can people reach out to you if they have more questions and or are intrigued by, all of your accomplishments? CPA, certified tax coach, co-author of an Amazon bestseller, and maybe let's say they maybe want to hire you to help with their taxes, or maybe just hire you to coach them a little bit.
Sure.
How can they reach out to you, and what's the best way for you?
So our office phone is 516-869-4051. Email is craig@ccodycpa.com. And we are giving your listeners that want it a free copy of our book. So if they go to our website, it's craigcodyandcompany.com/DPI podcast, or for Discount Property Investor Podcast. They could fill in a little opt-in, and we will mail them an actual copy of the book.
Oh, that's sweet, man. So I want to just reiterate that real quick, just so we can make sure we get that domain right. You said Craig Cody. That's CraigCody and Company, AndCompany.com. And then you said /
DPI.
For Discount Property Investor, abbreviated DPI.
Podcast.
Okay, cool. That's the link. We'll put that in our show notes as well for all of our listeners and all of our YouTube viewers. And then what will they get when they go there and they fill that out?
We will mail them an actual paper copy of the 10 most expensive tax mistakes that cost business owners thousands. And
10 most
expensive tax mistakes that cost business owners thousands. And it's packed full of all good stuff that we talked about.
Awesome. Okay, I got it in the show notes here. That sounds great. I can't wait to go fill that information out and get my copy. And then I'm also going to purchase the Secrets of a Tax-Free Life. That looks like an awesome book, Craig.
That's a great book.
Yeah, it sounds like an awesome one. Well, Craig, I also got some other ways for people to contact you, Facebook, Twitter, and whatnot. I'll throw all that in the show notes for you. I do appreciate your time today, and I've had fun learning a little bit more about some tax strategies that I was unaware of. I feel like I always learn something new on these podcasts, so I love doing them. But Craig, thanks again for joining us. If there's anything else that you want to add, we're happy to talk about it now.
Sure. No, just remember to communicate with your CPA and be proactive. Stop looking in the rearview mirror.
Stop looking in the rearview mirror. Look ahead. That's such a great tip.
Keep more of what you make.
Keep more of what you make. And that's really the goal here. Anywhere from 35 to 50% of your money goes out the door to taxes. And that's just kind of the average. I feel like also too, Craig, that, the harder you work for money, the more taxes you pay. It's kind of unfair. And I said it earlier, these laws are written by rich people to protect rich people.
That's right.
And the people that are making the majority of their money by trading, sweat, blood, and tears for that money, like they're actually doing physical labor. I feel like those are the ones that are getting taxed at the highest rates. And those that are making their money from dividends, from stocks, or passively from real estate, or even lending or something along those lines, they're getting taxed at a lower rate. And that's just the way it is. That's the law. There's no way around it. So again, it kind of reiterates that, taxes are written by rich people to protect rich people. So you want to try to get your income, coming from those particular areas so you can, save more of it and keep more of it. Wouldn't you agree with that, Craig?
Most definitely. Most definitely.
That's crazy. It's really crazy. Well, Craig, I appreciate your time today. Thanks for coming on our show. All of our listeners are going to love hearing about this, and hopefully they also will check out Secrets of a Tax-Free Life, the book that you co-authored. And then, again, go to craigcodyandcompany.com/DPI podcast, and they're going to receive a paper copy with 10 most expensive tax mistakes that cost business owners thousands. And, Craig, thanks for doing that, man. We really appreciate whenever we have guests on the show that, offer something, to the listeners. So,
thank you very much for having me. I appreciate it.
Much appreciated, Craig. Well, Craig, have a great day, and we will talk soon. And all the listeners out there, stay tuned for the next episode. Thanks again, guys. Have a great day.
Take care. Bye-bye.
Thanks for listening to the Discount Property Investor Podcast. If you enjoyed this episode, please like, share, and subscribe to help us reach a wider audience. To jumpstart your real estate investing career, please visit freewholesalecourse.com, the most complete free course on wholesaling real estate ever. We would also appreciate it if you left us a review on iTunes or Stitcher. Thank you in advance for your support, and remember, you make your money when you buy, and you get paid when you sell. Now let's go build some wealth.